course. Yeah, so hello, everybody. I have a few questions prepared,
Right.
and then we can also open it up to the audience and everybody else. So I guess just the first place to sort of start with, so you've done a lot of things in the past, and I'm kind of curious, so how do you sort of, like, how should people think about who you are and why did you choose to write this book?
Uh, Most of the things that I've done over the last 7 years, 6 years, have been because I wanted to just write and couldn't afford to just write. So I actually first tried to go fully into writing in 2016, 2017, and I was living in New York City with my then girlfriend, now wife, and got into it for 3, 4 months and pretty quickly came to the realization that living in New York City and trying to make it as a writer was just not a great short-term plan. And so I went in a lot of directions after that. I started a marketing agency. I had my blog. I was making some money off of that. Uh, Eventually left the agency, tried a few different things along the way. We opened a cafe at one point. And then I was at first going to take another stab at writing in this like late 2020, early 2021 period. And then there was all of this crazy crypto stuff going on. I mean, there were so many crazy things going on at that time. But this was the one that I chose to focus on and went fully into crypto and, got super involved in that. But then, after the events of the book, decided, okay, now I can actually go try to focus on the writing. And so even though I've done a lot of different things, I just think of myself as a writer now and really more as an author now because I've been doing the online blogging thing for a long time. And I'm really just trying to fully focus on book world now.
Okay, and sort of related to that. So my impression is that apart from building the cafe, sort of most of what you've done has been sort of doing things on the internet.
Yeah.
And you have like quite a lot of success there. So I'm sort of curious, like, what sort of a mindset do you like? Sort of how do you think about like what opportunities there on the internet to like make money or like make sort of like more money than say like a typical job would?
So one thing that's really beautiful about making money on the internet is that you can do it really quickly. If you want, so when we tried to open the cafe, we put a little over 100 grand into it over the course of a year to just to get it open, right? Just to start making money. And you compare that to launching a website, making a course, starting a YouTube channel, starting a Shopify store, any of those things you could start in a couple of weeks if you wanted to. Trying to do something physical in the real world, you've got this incredible ramp up time for it, which is a huge hindrance. But the benefit the physical things have that's easy to miss when you're in an online world is this like durability element. So the cafe for me was a bad example because we opened in January 2020 and then had to shut down 2 months later. So
timing.
Timing. Yeah, it was painful there. But the magical thing about doing a book versus writing articles is that articles don't have incredible durability. You think about the number of articles that you still read and still recommend 5, 6, 7 years later. It's few and far between, but you probably read a ton of books that were written 5, 6, 7+ years ago, maybe 500 years ago. And so even though there is this incredibly or significantly longer time to like get books going, they can last so much longer. And that's what I think is really beautiful about doing physical world businesses versus doing the internet stuff is like, yes, the internet stuff is way faster, but it can also die much faster. The algorithms can change on you. Your site can get hacked and disappear. Somebody can, come and eat your lunch, right? If you've got like an Amazon dropshipping business or whatever. But if you publish a book and people like the book, they might still be buying it in 10 years with you doing almost nothing else. And there's really nothing online that gives you that same kind of opportunity.
Okay, and on the subject of the book, so I was also watching the interview you did with David Perel that I sort of, and so there you sort of talked about, so when I look at the book, it seems to be sort of interspersed, like you sort of have these sections where you sort of describe and explain the kind of the crypto landscape to people, and then the rest is sort of like your experience and sort of like basically like your description of it. So in terms of like the readership, what do you sort of hope people will get out of reading the book?
So I mean, honestly, the thing that I most hope people get out of reading it is fun. It's like entertainment. I mean, the main thing is that they finished the book and they had a great time reading it. I didn't want to write a book that people felt like they had to push themselves through. Because one, I'm not the most technically expert person to explain all the intricacies of cryptocurrency and financial theory. And I think that part of why this world has remained kind of obscure and hard to break into is because so many of the resources to learn about it are kind of technical and confusing and hard to get through. And so my number one goal was, okay, let's write something super fun that sneaks a bit of the knowledge in along the way. And the analogy, and I use this in the David interview too, so forgive me for repeating it, but I tried to think of it like Harry Potter, right? Where when you finish a Harry Potter book or you finish watching the movies, you know the names of a lot of spells, but you never read an explanation.
You know the name of a lot of spells.
Oh, yeah. But you never like read an explanation of what the spells are and what they do. It was just in the story and you kind of naturally absorbed it. And I think it's a really powerful way to learn things. And so I figured, okay, if I can make it a really fun story that gets a bit of the knowledge along the way, then people will learn something about crypto they didn't know before. And then if they want to learn more, they can go to one of the more technical resources after. But this can be the entry point for the people who are on the outside, the partners who saw their partner getting super into it, the parents, cousins, whatever. They can get an intro to the space. And for the people who were super in it, they can feel kind of seen by somebody who was actually in it with them, not reporting on it from the sidelines.
Okay, so that's sort of interesting. Okay, I don't know if this is like a provocative question, but like, so who are the people that you think should be getting into the crypto space that aren't currently there, and who are people that are there that maybe shouldn't be in?
Oh, that's a great question. I don't know that anybody necessarily should be getting into it, but what I think people should have is the ability to see the good from the bad. Because something like 50 million Americans own some amount of crypto, right? Like maybe you just bought a little bit of Bitcoin on Coinbase or whatnot, but then you're seeing it in the news all the time. It's getting talked about a lot. And when it's being reported on, it often has one of these two stances of there are all these bad actors to scam, they're taking your money. You've got like Elizabeth Warren's anti-crypto army, right? This all needs to go away. And then you've got the utopian idealists who are saying that the dollar is going to zero and everybody needs to completely move on to this new, financial landscape, whatever. And like, I think both of those crowds are wrong. The reality is that this is a technology, like the internet, like anything else. There will be good uses and bad uses. There are going to be a lot of scammers and bad actors, and there are going to be a lot of people doing cool, interesting things with it. And you just need to be able to know how to tell the difference. And I think this is kind of like a broader theme in America today, that there are a lot of people in the middle on a lot of topics who just want to like understand the topic better and are tired of just being talked at from the two extremes. And so that was the lens I wanted to give people here was here's how to see the good from the bad. Here's how to be a little bit more informed consumer. And then if you want to get into it, hopefully you don't make some of the same stupid decisions that I did.
Okay, I feel like that actually maybe sort of actually preempts the question that I was thinking of asking about next, because I saw this essay you wrote, which was the title, I think the title was When the Money Was Sort of Too Good.
Yeah.
Which as I sort of see it was about the sort of question of how to balance the sort of like seeking meaning or trying to do meaningful things or things that are important to oneself and sort of making money on the other hand, and how easily one can sort of get pulled into it. And sort of, as you mentioned, crypto kind of has this two poles to it, as I see it, where on the one hand, it is sort of a way to kind of sort of like very, very cynically make money for some people, but there are also all of these like narratives about how, it might somehow change society, or it's like a very important technology that might change things. And I'm sort of curious, like from your point of view, like how did you see that? So for example, in terms of these sort of stories about the importance of these technologies, did any of them kind of connect more with you than others? Like how do you sort of think about that?
I definitely think that there's a lot of interesting and important technology being built. And the analogy that I like related to your question is that you can be in it for the money or the tech. And a lot of people come for the money and then stay for the tech. And I definitely came for the money, as I think a lot of people do when they come in. But once you get to a certain point, then you have to ask yourself, do I want to work on the tech side? Do I want to keep chasing money? Or do I want to step back and do other things and like watch the tech develop? And I do really believe that it's going to become part of our financial lives in a meaningful way. And even just the very simple example of the fact that it's ridiculous that every credit card transaction has basically a 3% fee attached to it. Right? Like that's wild. And that's kind of a holdover from when credit cards started, before the internet, right? And you were able to charge those kinds of fees. But now using something like this, you could just instantly move money around with basically no fees. And it's clearly going to provide a better rail for something like that. And like Bitcoin is going to provide something similar to gold for people who grow up with it and would rather store some of their wealth with that instead of another commodity. Like those things to me seem kind of inevitable on a longer timeline, but I don't believe that the whole world is going to be radically changed in 5 or 10 years and everybody's going to be like getting paid in different tokens of these different companies and we're going to be like buying each other's shares on Twitter or whatnot to invest. Like the crazy that all this stuff is going to happen right now, I don't think that's going to happen, but I do think the tech is going to advance these interesting ways. And, realizing for me that I wasn't going to go work on the tech side. And I didn't want to keep playing the money game. And so related to that article, it was better to just like step back from it, not let the money keeping the focus of everything and let the tech people keep doing their thing and building some of that interesting stuff for the future.
Okay. So in terms of like the crypto narratives, one of the so something that I find kind of interesting about crypto is that it has this duality where a lot of these kind of narratives are about trust. And there are these stories about how crypto is this trustless technology and it allows us to not trust these like mainstream institutions that are kind of inherently untrustworthy. And at the same time, crypto to me feels like one of the most kind of untrustworthy spaces in existence. And so I'm sort of curious, like how you see this sort of like, what is your view on trust and everything related to that?
Sorry. I mean, you're absolutely right on both of those points, right? There's this big discussion around, okay, we got to decentralize everything, we got to take the power away from the banks and the institutions, return to the people, and crypto can be this incredible tool for that. And in some ways it can, right? A great example is just like getting loans, right? Because I mean, one, if you're like a minority in the US, then you understand that some people get treated differently when they want to get a credit card, when they want to like borrow against their assets. And there is this human element in the banking system that can be incredibly unfair to people. And a purely algorithmic system for allocating credit, allocating, loans, things like that against your assets would be better to take some of that bias out of it. But at the same time, the idea that everybody is going to fully self-custody all of their wealth and not trust a third party to help with any of that is kind of ridiculous, right? Because just as an extreme example, there's some people in crypto who would argue that we need to get rid of title companies, right? We don't need a title company to manage your house or your car, any of these things. And you can have your title as an NFT and you can keep it in your wallet. And like, that's what proves you own your car and your house. And that is a terrible idea because, you lose the piece of paper, you lose the keyword manager that has the private key to your wallet on it. And now suddenly you've like lost your house, right? That's probably not a good idea. And so we're always going to have trusted third parties for things, but being able to remove some of the third party decision makers for who gets access to money, I think that could be a really good thing. And so really what I think we're figuring out is where can we replace fallible humans with better software and better algorithms? And where does it make sense for people to take on a little bit more individual responsibility and not delegate everything to a third party to manage it for them?
Well, okay, that's actually a very, very interesting answer. Okay, I might circle back to this, but another thing I'm kind of curious about is like one of the most fun parts of the book, as far as I've seen it, is that there is this section on how to be like a shady crypto influencer. And something that I've been sort of wondering about when it comes to a lot of these sort of crypto project is how does so whenever you have this sort of speculative, like the way people talk about a lot of these speculative bubbles, at least to me, always seems like it leaves a lot of kind of questions unanswered. Like for example, so for example, things that are never clear to me is like, for example, when somebody starts one of these sort of speculative projects, like where does most of the money kind of for them come in? Who does the marketing? Is like marketing this project something that you can kind of just keep sort of doing indefinitely or not? Like when the sort of the kind of the like when kind of the fun runs out, like what are the channels that kind of get tapped out? So I was just sort of curious, as somebody who's like in it and experiencing it, what can you sort of say about these sorts of things, like especially given the marketing background?
Yeah, well, I can give you a really good example of kind of the bad way that it works, like you're talking about, and then the good way that it can work. So the bad way that it works, that you see a lot of right now, the big like meta game in crypto speculation is meme coins or shit coins, right? Which are basically crypto tokens that have no fundamental utility or value, except that they're fun to speculate on and hope the number goes up. And the main way that you launch one of those right now in a successful way is that you and a group of friends have a large pool of money, ideally like $5 or $10 million. And if you're one of these big crypto people, you can coordinate that amount of money pretty quickly. So you get your buddies together and you put in the $5 or $10 million, and you're all the like seed liquidity to start it out. You launch the token and you've all bought in at the starting price, and you have that kind of like initial seed money. And so your downside is pretty capped. It can't go much below that because you guys created all the tokens. There's nobody else to sell them. Right. So all of your downside is like relatively set. And then you start trickling that information out to your network. And then other people know that you guys have money. And so they start buying in and they know that they're early. And so they feel reasonably comfortable that, oh, once it gets out that these guys launched the thing, right? Like other people are going to come in. And so it's almost like an MLM, right? Where you're recruiting people and they're buying in and the price is going up. And then more people are buying in, the price is going up more. And then eventually the whole thing is going to start to collapse because those early people are going to start to get scared. They're going to say, hey, this token is on paper worth $2 billion, but there's still only $10 million of trading liquidity backing it up, which means that if everybody tries to sell at the same time, you don't get 2 billion, you get 10 million.
Right.
And I currently have $300 million worth of tokens, which is really still just $10 million. And so you really quickly get into this prisoner's dilemma of like, who's going to sell first? And then the whole thing just like collapses, right? Not a great system, but it's how these like meme coins get started. The good version of it is when you have something, I mean, like Bitcoin, that starts out with a fundamental value of 0, right? I mean, it's just people were playing around with it on their computers. They were mining it, making more of it, passing it back and forth, spending, thousands or tens of thousands on a pizza because again, value is very low, but people slowly start to believe in it more and the value goes up a lot slower. And it's a slower build of trust. Right, so you have like that version, or you have some fundamental utility attached to it, right? Like, Ethereum might be a good example of this, where yes, there's a speculative element, but also people are spending it to use the actual Ethereum blockchain, like it has some utility in that sense. And so really like every crypto asset or every speculative asset, I mean, stocks are this way too, right? Falls somewhere on that spectrum of there's a very strong underlying fundamental value here that this price is based on, or it's just like pure mania. Like Nvidia is kind of an interesting example of this right now, because on the one hand, it's had this insane run up where it really feels like this crazy speculative mania, but they also are having these incredible like profits and incredible revenue numbers. So there's like some justification for it too. And it like that's the hard thing you have to ask when you see this stuff taking off is like, how real is this versus how fake is this? And unfortunately, crypto still has that strong manic speculative element, but hopefully smarter, longer term investors are just going to put their money on the things that have like some real reason for existing.
And in terms of, again, I don't know if that is sort of known, but in terms of like the money that sort of comes in crypto, is most of the money that has sort of gone into crypto, is it like sort of VC? Is it retail? How does sort of, or is it some other kind of other sort of money? How does that look like?
It sort of depends on the season. During the bear market, right, when things are quiet during the winter, it's a lot of VC money, or some of these big institutional funds, like BlackRock has been putting tons of money on chain because they feel very optimistic about it, but you're not seeing much of the retail speculation. Like Morgan Housel has this great quote from Psychology of Money, where he says that the main indication of a bubble is when the money coming in is looking for short-term profits versus like long-term investments. I think that's where you start to see the deviation between the like builders, the investors, and then like the retail money or the dumb money. And so right now, it's a lot more of the investor builder longer term thinking. But if we have another crazy mania in 6 or 12 months and you've got Elon on SNL talking about Dogecoin, it's going to be a lot more retail money, like just looking for those short-term profits. So it kind of like ebbs and flows.
Interesting. And in terms of the so in terms of like the most recent collapse, it seemed to have come from the collapse of these sorts of like crypto institutions, like I think Luna and sort of FTX and sort of like that. How was sort of going through that like and in terms of like yeah, how did that sort of feel like, just like from the perspective of like experiencing the space?
Yeah, it was the biggest thing that really illuminated, and this has been illuminated before in
Mhm.
many markets, it's not new to crypto, but was how much of the wealth was just leverage stacked on leverage, stacked on leverage, right? And this is kind of like a tale as old as time in these speculation and speculative markets, because when Terra Luna collapsed, it wiped out $70 billion ish in the span of 4 or 5 days.
Mhm.
But things got much worse because all of these firms had borrowed against their Terra Luna holdings, right?
Mhm.
So Three Arrows had borrowed against it, and then they'd also borrowed against their Bitcoin and their ETH and everything, and they'd borrowed against it multiple times with multiple people.
Mhm.
And so their numbers were crazy inflated because of all this debt, and now suddenly they had no collateral to back it. So all of those people blew up. And then you had people who were holding customer deposits like Celsius and BlockFi, and like they blew up because of
Mhm.
it. And then that created all these other holes in balance sheets, which then blew up Alameda, which
Mhm.
then blew up FTX, right? So you get this like crazy cascade.
Mhm.
And that, I mean, one, it's like a good reason for reasonable regulation,
Mhm.
because somebody like Three Arrows shouldn't be able to take out debt with 10 different people on the exact same assets, because that's going to lead to these problems.
Mhm.
FTX shouldn't be allowed to gamble with customer funds, right? Like those are all legitimately bad actors. And living through it, it was kind of like, okay, none of these numbers were ever real,
Mhm.
right? When we saw Bitcoin back then at, it topped at like 69,000, of course, and ETH
Mhm.
topped at 4,800 or whatever. It's like those numbers weren't really real. I mean, they were, but they were so inflated by how much leverage was in the system that
Mhm.
you needed that to kind of get wiped out and reset. But it's going to happen again.
Mhm. Right.
It's going to happen again, just like it's going to happen in so many other places. And so the thing that you have to keep in mind is that when you see those crazy numbers happening, again, the like underlying amount of money backing it up is way, way smaller. And
Mhm.
especially in crypto, it might only be like 2% or 10%, where if everybody tries to exit at once, that's all that's coming out. And
Mhm.
so you've really got to keep that in mind if you have money on the line,
Mhm.
is that this number that you're seeing in your spreadsheet or in your portfolio
Right.
tracker, it's not real
Mhm. Yeah.
unless you like try to get it all out now, which, depending on how much there is, you might not be able to do.
Mhm. And because on a slightly different note, so reading the book, one of the things I was sort of wondering, like, of all of these different experiences you've had, sort of and described, I don't know, which is sort of you kind of most want people to know about? Is it the one sort of from the prologue where you seem to be getting hacked, or is there some other one that is like most interesting?
It's a good question because I had an interesting journey in that I was speculator, gambler,
Mhm.
and I was programming and building things. And I think that most people aren't going to try to like teach themselves Solidity programming and build apps on Ethereum or Solana or anything, right? Like that story is probably not as directly relatable to most people's experience. I think
Mhm.
the story that comes up a couple of times that is, I think, really important for people to remember is kind of the one that you already mentioned,
Mhm.
the like how to be a shady crypto influencer.
Mhm.
And how many people are profiting off of making you think that you're going to get rich
Mhm.
by buying into something. Because if you're coming in during the mania and you're buying what people are talking about on Twitter or TikTok or YouTube, you're their exit liquidity, right? Like exit liquidity is the term that everybody needs to keep in mind
Mhm.
playing in any of these bubbles. Because if you're coming in later, you're the one who's funding them to get out of the game.
Right.
And so you've got to just be really, really careful thinking that anybody sharing information actually has your best interests at heart,
Mhm.
because often they don't.
Right. But actually that sort of reminds me, because so for example, I think that there was sort of a story right at the beginning where you talk about farming,
Yeah.
where a friend just brings you this sort of project and you're sort of trying to figure out, is this real or is this not real? So there too, you could just be an exit liquidity for that
Yeah.
person, or they could be bringing you a legitimate opportunity. I'm just sort of kind of curious, like what sort of intuitions did you develop for
It,
thinking about that?
it's a great question, right? Because, and usually a close friend, right, who you've seen for a while is not going to be taking advantage of you.
Mhm.
And so you can rely on them. But then you start to make other friends in the space who you meet on Twitter or you meet
Mhm.
on Discord, and maybe you don't know their real name. And so, it's like, oh, it seems like we're friends, but if we both have a ton of money in this project and we both can't exit at the same time, like how long are we still going to be friends for? Right.
Right,
And
right.
I run into that problem in the book, right?
Mhm.
So there you do have to develop that intuition. And unfortunately, it's one of those things where it's like nobody can tell you how to swim,
Mhm.
right? Like you just got to go swim.
Mhm.
And then you can get some feedback and stuff, and people can give you little tips and tricks, but you've got to swim a lot if you want to learn how to swim. if you're going to do that, you've got to just like play a lot and try to get a sense of when somebody is working with you or is partially working against you. And you kind of always have to have your guard up, right? That's why I have one of the, or a couple of hacking stories in there, is that there is a lot of risk playing in these like Wild West areas of something like crypto. And sometimes you have to get burnt. Sometimes that's the only way you learn, right? Like people had told me to take my security seriously. They had told me to be really careful in all these ways, but it wasn't until I like came back from dinner and was just like watching somebody draining my wallet for tens of thousands of dollars that I went, oh, okay, I should take this more seriously now.
Right. Okay. And then maybe okay. I just want to check the time so that people can do the honest thing. I'm just sort of curious. So at this point, do you think of yourself as sort of done with crypto, or do you want to do more things there, or are you like just want to write about it? How do you sort of think about that?
I have my stash left from that period, and I just leave it. And I try not to look at it too often and sell bits here and there as I need to. But I try not to do too much of the active speculation investing side. I mean, one, I know that I just have a very addictive personality, right? And that's manifested in good and bad ways in multiple parts of my life. And the minute I have a wallet on my phone and I'm checking price charts and stuff, like I know stuff's going to get bad soon, right? And it's going to like lead to a lot of the same problems that came up in the book. And so I just don't let myself touch it too much. But that said, I still follow it relatively closely because I'm really curious now around what's actually being built, like the actual tech side. That's really cool to me. And thankfully, if you're mostly just following the tech side, you don't have to check in that often. It's not like price charts where crazy things are happening every single day. The tech is moving slower and is being, developed in an interesting direction, but you can check on it every week or two or even month, and you're going to have a pretty good lay of the land. And so that's sort of where I am with it right now, is stay up to date on what's going on, trying to get too active. And I don't think I'm going to write another book or anything about crypto. I'd love to continue to do this and talk about it from a like, here's how to be an intelligent observer and understander of it. But again, my intention is not to be the person who is like, here's the newest stuff that is launched this week, and like, here are the things that you should be excited about. Because I think there are people who are deeper in that part of it who can do a better job in that regard.
Okay. Yeah.
I have a question. So there's a chapter in the book that it seems like Alcoholics Anonymous, but for crypto public people, which is basically about like, how do you know you have a problem?
Yeah.
Do you maybe want to speak to that a little bit and guide us through it, whether you still agree with yourself and what you thought when you were writing the book, and whether you think that crypto addiction can be fully equated with gambling addiction or other types of things? Or is it its own specific third, more complex thing?
I think that there are a number of addictions that are in some ways almost worse than gambling or mild substance addictions, because it's very easy to convince yourself that it's good that you're addicted to it. And so like
wine experts.
I was going to say like Twitter would be because as somebody who's a writer, right, and like we're in this world, it's very easy for me to convince myself that being on Twitter all the time is good for me, even though I know that it's having these negative psychological effects and making me more anxious and making me less present with the people around me. And and Twitter is thankfully a little less destructive than the crypto version. But with crypto, especially during that period, I mean, anybody else who was deep in it might remember something similar, where when we would hang out when my wife and I would hang out with friends, all of the guys would kind of like go off in their corner and just be talking about prices and coins, like what they were investing in. And it would take less than 5 minutes for that to happen. And the wives and girlfriends would be like, we're fucking sick of hearing about this. And they'd be off in a different corner being annoyed that we are once again doing this thing. And that was not a good habit for us all to be in, but it was the only thing that we wanted to talk about, the only thing we were texting and just everything about consuming us. And again,
reinventing the cigarette. Right?
Yeah, exactly. Right. Yeah, we're off in the cigar lounge, but we're thinking it's good because we're making money off of this, or we have the potential to make money.
One of the ways, and I love that, and I know this from other friends who are addictologists, and I know about this from them. One is that when you're no longer telling your spouse or your partner how much you're really investing.
Yeah.
Right. Like, what would be the Twitter equivalent of that?
There probably isn't a great one. I think that's a good reason that the analogy breaks down. Maybe the closest would be how much time you're putting into it. And so if you're, I mean, let's say that you're trying to grow a business or you're trying to write a book, right? And instead of spending 3 hours every morning writing your book, you're spending effectively an hour writing the book and the other 2 hours crafting Twitter threads or replying to people and trying to grow your Twitter audience, right? And so, I mean, that would, if we're going to like force an analogy, that might be it. But you're right, there are ways that it definitely breaks down.
Just really quickly, you guys are talking about this. There's a famous scientist who, and I know you'll know, actually a lot of people will know, I'm not gonna say who it is. During the crypto period, I would go over to his house and his wife would entertain us and he would be upstairs trading. And he was supposed to be there, but he just could not come down. It was really weird. He's over that, but
Did
Yeah.
he make money?
I think he netted out 0.
Oh.
He was really rich for a while.
Well, I mean, that's actually a really good example though, because like I ran the numbers on this after everything was over, and there were basically like there were only like 3 good decisions I made, and all the other decisions were pretty bad, and it all netted out to being barely slightly better than if I had just held ETH and Bitcoin through the whole thing. And for a lot of people, they did a lot worse than if they had just held ETH and Bitcoin through the whole thing. And so there was this element of, yeah, you're being hyperactive and it's not actually doing you any better than just like the market beta.
It's
of being
opportunity
in the
cost of
mania.
time.
Yeah.
This is what I'm thinking about this
It's
guy.
incredible.
I was over at his house and I didn't really see him that much for a year.
Yeah. And I had a lot of friends. I mean, I really felt this way too, where we were so insanely deep in it for that year and a half, almost 2 years. And then we came out of it. And a lot of us said that, you know, we didn't actually develop any skills that
Yeah.
we cared about from that.
We were just playing.
Yeah, we were just playing. We were just gambling. And I got kind of lucky that I was able to parlay it into doing this book. But there were a number of other people who maybe like abandoned their business they were working on, or they, you know, put it in the back seat, and now they were trying to get it started again after taking 2 years off of it to do this, you know, manic gambling. And it ended up really being a loss in that sense because of the opportunity cost.
Why did crypto uniquely grab people in that way? Like you've always been able to do
Yeah.
stocks. You've always been, I mean, you had your GME and you had like all that stuff that happened, but like historically, there's not been this like massive craze of I'm obsessed with tracking my thing day in day out. Like, why was crypto? It seems
Yeah.
uniquely like captured that when you always had the ability to gamble. You could go to casinos, they're less accessible, but you could do that. What was unique about crypto, like capturing this in a broader way that most people netted nothing in the end, but it was such a thing?
I think that it was because it was so easy to imagine that you could be one of those people who bought $5,000 worth of SHIB and it was worth literally $1 billion a year later.
Yeah.
Right? Like you could see that, where you could see literally, you could see somebody doing almost nothing and becoming insanely wealthy in a short time period. Because with day trading, I think there's this assumption you're gonna have to be really active, right? You're gonna have to be super in it. But there were people who just bought a bunch of random Bitcoin in 2010 and then just held it and didn't sell it. They like basically did nothing.
Yep.
And got crazy rich. People who bought, you know, the right meme coin for that era and got insanely rich. I think it really appealed to that idea that you could do basically nothing.
Yeah.
And then be done working forever.
Somebody had to be pumping the story of that one person relative to the 99 that did.
Yeah.
And like, who was the person that was not person, but like just as many people were 0 or negative as the few people that 1000x'd.
They don't get written about, right?
Yeah.
They're not posting their portfolios on Twitter showing how much they made. It's kind of like a consequence of, I think, social media and everything is like those few big stories can spread so quickly that it makes you think that there's a lot of those stories happening when there aren't nearly as many as you might believe.
Isn't like also the shared secret of I know this language, I know the thing that makes me smarter than everything. It's the same way that why, you know, kids get into Pokemon, kids get into all these different things that have that shared language.
Yeah.
That they're able to say, like, I know more than my parents do. I know more than this. And that not saying that people in crypto are like children in that sense, but it's the same kind of mentality going like, okay, that's because obviously when you see the day trade, it's like, okay, you know, you can buy this stock, I can buy this stock, but like this new coin that I've never heard of, but you have, well, now I've got this magic, you've got this edge that I don't have because you speak the language and I don't.
Yeah.
And that gives you the edge. And when in reality, if we say we all net it out, probably doesn't.
Yeah.
But that you have this kind of thought that, well, I'm ahead of the game in that way.
Secret knowledge is really sexy, right? Like people love that idea of having secret. I think that's why conspiracy theories are so exciting, because it's like, yeah, if you can know something that not everybody else knows, that feels very powerful. And then if that can also make you wealthy, it's like even more exciting. And it feels like a lot of crypto does, especially at the fringe speculative side, it does revolve around knowing that there are people out there who have secret knowledge and desperately wanting to become one of those insiders yourself.
I think it's a good point of like, oh, I think a lot of it's about the community aspect.
Yeah.
Because when people were day trading in like 2010 or whatever, it's kind of a bit more of a solo effort. But crypto brought all the ideology with it. There was all these meetups, there was all these things, all these people were coming together around these ideas. And so there's these communities, there's the Telegram groups of all these people who are trading together. And even like GameStop, it was Wall Street Bets, it was like the Reddit forums and all these things coming together. So it wasn't just that people were doing this by themselves, is that they had a community of all these other people around them, the men's cigar room groups and everything that were kind of push you deeper rather than just kind of letting you get bored by yourself.
Right.
One thing I'm sort of curious about, how was your process for writing this book like? Like, how did you sort of parlay, like you said, going from like crypto to sort of writing this? And yeah, what was the process?
Yeah, it was really a challenge at first because when I originally was talking about or thinking of doing the book, it was going to be heavier on the explaining side. And then it quickly started to shift towards being much more on the narrative story side. And that created a whole new set of challenges because I'd always been like a how-to nonfiction, or not like nonfiction, but like a how-to self-helpy type writer, like a techie writer, and not, a narrative writer at all. So it required developing a whole new skill set. And then it was almost like on hard mode because I had this dual challenge of telling an interesting story while getting the right amount of education in there along the way. And so, working through different drafts and re-outlining it, I eventually kind of came up with an outline, which was, here was the actual chronology of all the events that happened, and then figuring out what was the most interesting set of those events to make a good story, but then overlaying that with, here is a linear progression of the amount of the knowledge I want people to have by the end of it. And then how do we line up those concepts with the events that happened in the book? And one change that I had to make was, in the beginning, I tried to be 100% accurate on the level of detail of what I was doing every step of the way. But the problem with that was that it required me to introduce very complicated technical concepts really early. So I had to like slightly tweak some of the things that I was doing to make the simpler stuff happen earlier, and then introduce the more complicated things as we went, so that it wasn't like way too much at the beginning. Because when I first showed drafts to people of the early chapters, they had no idea what was going on. They were just super confused and super lost. And so a concept like, using decentralized exchanges and adding trading liquidity to them, and then getting a receipt for your trading liquidity and depositing that into another app to like get paid their tokens, right? These like complicated things that I was technically doing in and I didn't introduce until chapters 4, 5, or 6 because I knew it would be like way too much at the start.
That actually, so something that I at least sort of struggle with when it comes to writing is that how does one best learn from like other people's feedback when it comes to writing? Because my impression is that like, when people write, you will often spend quite a lot of time with the piece sort of alone. Then people may or may not read it. You don't really have like insight into their experience as they do so. And then they sort of tell you back something sort of short. So I'm always curious like how that kind of learning loop works for people.
There were really only 2 questions that I asked people when I gave them drafts, which were, where did you get bored and where did you get confused? Because I figured if I knew those 2 things, I could figure out a lot of how to resolve those problems. And the other thing that I really kept in the back of my mind when giving drafts was, how much crypto knowledge does this person already have? Something I learned early on was that my friends who knew a lot about crypto were actually really bad draft readers because they didn't get confused, right? And they'd be like, this is great, this is really fun, I love this. And then I would give it to somebody who didn't know about crypto, and they wouldn't get through more than a few pages before they were just totally lost. And so I actually ended up asking a number of my friends' partners to read drafts.
Mhm.
And then I would just say like, look, keep your phone on your desk right next to you while you're reading it,
Mhm.
and just mark anytime you pick up your phone.
Mhm.
Because that's going to be the most honest tell of when you got bored or lost or something. And that tells me there's something here that I need to
Mhm.
work out, even if you're not totally sure like what it is.
Mhm.
And I would also do this thing where I would sometimes ask a draft reader little crypto questions after they had read a piece to see what they actually got and if they picked up what I was trying to explain. And that was really helpful because sometimes they would say something that was not like ridiculous, but pretty outlandish, just very incorrect
Mhm.
from what they had read. And so that told me that, okay, this is still too complicated. It needs to get like way simpler.
Mhm.
And so it was really illuminating just how bad the curse of knowledge is,
Mhm.
where, you know, once you know something, you kind of think that everybody else knows it. And it's really hard to imagine not knowing it anymore.
Mhm.
And so really drilling on that with the draft readers was probably the most helpful thing for getting it to that more accessible level.
And how does that, for example, compare with like writing sort of how-to sort of articles? Is that like a very different game, or is it sort of similar in that state?
It was really different in this context because if you're writing an article on, you know, I had a period where I wrote a bunch of articles on how to use like Rome research, right, for note taking and organizing your information. Anybody who's going to read an article on how to use a personal knowledge management tool is already pretty bought into the topic and is already pretty willing to do the work to get through the article and download the information. In a narrative, you want first and foremost people to finish it and to like be entertained. And so it had this additional challenge of I didn't want anybody to force themselves through the book. So all the explanations had to happen really naturally in the story. And it ended up being kind of, at least for me, impossible for some of the topics, which is why the book has the structure that it has of a narrative chapter and then a mini explainer chapter. Because by breaking it out that way, the narrative wasn't getting interrupted by some of these longer explanations. They could follow the whole narrative. And then if you look at it closely, every chapter ends on a cliffhanger. Almost every chapter ends on a cliffhanger. So you're pretty motivated to find out like, okay, did he actually lose the money, right? Like what's going to happen in this fight, right? Like, what the hell is going to happen? And then you can read the 3-chapter tech explainer, or you can just skip it. You know it's there if you want to come back to it later, and then you can just keep going with the story. And I'd say that at least 50% of people skip a lot of the explainers in the beginning, right? Or, you know, maybe they know some of them, they don't need all of them, and that's great because there's a very clear and easy way for them to skip it. If I had forced all the explainers into the narrative, they wouldn't have known how to skip them and they would have just fallen off the story entirely. So I think that structure worked really well for something like this, which is trying to give a lot of information while still letting you just go through the story if you want to.
Out of curiosity, what made you write the articles about Rome?
I just liked it. It was fun. I mean, I think the more honest answer is I think that I bought into the myth that a lot of people buy into, which is that if I find the right productivity setup, then like I'll never have to work again and I'll be endlessly wealthy. And I mean, that's sort of the whole mythology of the productivity world, right? Is that like kind of like crypto, there's this secret knowledge out there. If you find the right secret knowledge, then your whole life gets easy and your business is solved and you don't have to like work hard anymore. And part of, you know, one of the beliefs I bought into was, oh, if I just like find the right way to collect all of the knowledge in the world and properly organize it and index it, then I'll write better articles, or, you know, I'll be able to make more money. I'll be able to do all these things. And then you quickly realize that like 99.999% of all the incredible writing in the world was done without a intricate knowledge management tool.
Right.
And like all of the best business people in the world are just raw dogging it with Apple Notes and like Apple reminders. And like most of that stuff is more of just a way to procrastinate than actually improving your output in like a really meaningful way. But it is really fun, right? And so it's like if that's your hobby, there's like that's great. There's nothing wrong with that. It kind of gets back into that idea of like these insidious addictions that you get super into because you think they're making your life better when really they're distracting you from the thing you should be working on.
And I'm curious, so what other forms of writing do you sort of, because like I got this impression that there are like other forms of writing that you sort of want to do apart from like this sort of stuff. So what is that?
Yeah, I mean, the next book that I'm working on is a sci-fi novel.
I see, okay.
Yeah, so I had so much fun with the narrative side of this, and I got so deep on the storytelling, and I had to study a lot of fiction writing to make it a fun story. And the more I studied it, the more I started thinking, it would actually be more interesting if like this event happened instead of the way that history actually happened, right?
Right.
And it was like, oh, I could, if this were a fiction book, I could actually make it better, right? But so I felt a little constrained by that at times. And then I turned in the final and I said, well, I keep thinking it would be fun to do a novel. Let's just try it. And so I just put all of the Crypto Confidential stuff in basically like a folder and didn't look at it, and started working on a sci-fi novel after the final draft was in. And it was super fun. And I loved doing it. And so I'm excited to get back to that in a couple of weeks.
Just one more thing, but before, because I'm really curious about this. So something that I'm really curious about when it comes to different forms of writing is like, what are the forms of writing you feel where people have like really figured out the marketing? So if somebody does that form of writing, they can sort of build an audience and turn it into a thing. And for what forms of writing is that sort of a much bigger challenge and something that people kind of sort of seem to have not quite figured out how to do in a repeatable way?
That's a really good question. I mean, I will say that the pop nonfiction, pop psychology format has at least temporarily been kind of solved. You can find editors and marketers and everything who know exactly how to run that playbook. And if you have the right idea at the right time, you can make kind of a mega bestseller in that category. But there's still a huge amount of luck involved, right? Like, it's hard to say that anybody's really solved it, because if they had, then it would all be tapped out. But there's definitely structures within that work. But the problem is that the more those things work, the more tired they become. So I feel like we're kind of in this interesting transition period with nonfiction, where the pop psych book of here's this big idea, and now here are some stories about that idea, and each chapter is supported by like some research and then the key takeaways. And like that format has worked very well. And I think people are getting tired of it. And I think it's starting to fall off a little bit, because I don't know about you, but when I start reading a book and it keeps saying, studies say, I'm sort of like, this again, right? And so I wouldn't be surprised if that format falls off in the next few years, but then it'll be a question of what's next, right? And somebody will come out with the next like big nonfiction book that introduces a new style. And like fiction has this too, right? So romantasy is the big like genre right now, romance fantasy. And a bunch of editors got together and they said, we're going to create the ultimate romantasy novel. And they pooled their resources and they figured it out. And then they hired a writer to write the book. And that book was Forthway. And it's the best-selling book in the world last year. Like, it's up there with Atomic Habits, right? Incredible success. And everybody's trying to do romantasy now. So in 3 or 4 years, it's probably going to be tapped out, and there's going to have to be something else. So it's like, yes, those things do happen, but I feel like the time to mine them is very short. And so you kind of have to be trying to like ski to where the puck is going, especially since books take 2, 3, 4 years to make. If you try to follow the current trend, you're probably going to